What is up, everybody? Solomon here. Happy Thursday. I may not make a video tomorrow or Saturday, so if I do not, I hope you all have a great weekend. Maybe I'll live stream or something. My videos have been going a little bit longer than I've wanted to, so I'm going to hop right into this. I want you to keep this slide in mind right here, okay? This is reducing payment friction. This is by Cigar, I forget the guy's last name, from Ripple here, presenting to the IMF. I think this was 2 years ago, 2018. And keep this slide in mind, okay? Cigars Sarbhai, I probably mispronounced that. And this is reducing payment friction, okay? This is directly from McKinsey & Company, which you will see further on down the road here. And basically shows that XRP can remove 70% of the costs for an international payments transaction as it currently stood from 2013 to 2015. This is showing the cost of an international payment, the average cost as $25 to $35, and we'll see that here down the line too. And most of that comes from payment operations, Nostro, Vostro, liquidity, which I'm actually going to get into in this video and describe. I know that a lot of times in the crypto space we use terminology that's just assumed that people understands what it means, and I've been meaning to make a video like this for a while and actually describe to you the problem that Ripple is trying to solve via XRP's utility. So payment operations, Nostro, Vostro, liquidity, claims, and treasury operations, okay? You're always going to have compliance. You're probably always going to have network management. So, all right, let me get into quick news. Twitter hackers who targeted Elon Musk and others receive $121,000 in Bitcoin. The big takeaway I got from this, as of this press briefing, there was also an XRP address posted, and big shout out to the XRP community. No transactions were received via the XRP address that was a scam. $121,000 or whatever, though, was sent to the Bitcoin address. Everybody in the digital asset space needs to understand there are tons of scams out here. Never, ever, ever send your money to something that's telling you they're going to send you additional or more than your equivalent value worth back. That is a scam across the board. Again, you can always reach out to people. We're all here for you, and able to field questions. Okay. Now, this was interesting today. The IRS inks a deal with Coinbase for blockchain analytics software. So the Coinbase is basically an IRS customer at this point. $124,950 for a single year. Interestingly enough, if we go back here about a week or two ago, Coinbase also partnered with the Secret Service in the United States for analytics software. We can see both of these right here. Coinbase Inc., ultimate parent entity name, and the contracting agency is the U.S. Secret Service. And again, IRS, okay? So don't spend your crypto on fraudulent things, especially if it's Bitcoin or something like that. I'm not telling you to use a privacy coin. I'm just telling you use common sense and pay your taxes, everybody. There's only two things for sure in life, right? Death and taxes. And if you're not paying your taxes on your digital assets, it's going to catch up with you. I just had to do mine about a week or two ago before the July 15th deadline. And it was a pain, but I did it. There's no easy way to do it, but even if you just do it, is better than just completely blatantly ignoring it, because it's going to catch up with you. All right, now, so CFTC today had a meeting on digital currency. I watched a bit of it. It was very dry, a lot about central bank digital currencies, which are coming, but the US is just so slow. I mean, we're just talking. Meanwhile, China's got like governmental patents, like 350 patents that they're using in the government already with blockchain and DLT and digital assets. And they're going to be rolling out their digital currency here this year, I think, as a trial with it's a crazy high amount of people. I want to say it was like a quarter of their population, and maybe less than that, but it's crazy. All right. Major lobbyists in DC see a shift in regulatory tone towards crypto. This is from Chamber of Digital Commerce. They're saying that there is a 180 in the conversation due to the pandemic. So Congress is going digital, which it's about time. We should have been there years ago. Real quick on news, Microsoft and Waves Enterprise to engage in development of corporate blockchain in Russia. Microsoft Corporation and Waves Enterprise hybrid blockchain platform will develop a corporate blockchain in Russia and launch a cloud service for automatic transaction analytics and audit of smart contracts. Waves Enterprise press service told Sputnik. The 5-year memorandum signed by President of Microsoft in Russia, Kristina Tikhnova, and Web3 Technology CEO Alexander Ivanov. You could see back here in 2019, Russian banking and retail giants launched blockchain service. This is with Waves as well. This is the largest private commercial bank in Russia, which is Alpha Bank, and X5 Retail Group. The launch of Russia's first liquidity management blockchain service. So that's Waves for you there. Blockchain technology will remove barriers to instant settlement. This is the video here, everybody. I want to read this for you guys, and this is more of an explanatory note for people that aren't aware of the inefficiencies right now in payments and settlements. I know Brad Garlinghouse always uses the metaphor that, you know, he can get on a plane with a briefcase full of money and fly to a different country before an electronic transfer would actually get there. And that's true. It's extremely inefficient. So participants on and this is actually by Epiphany, which is a competitor to Ripple, but I thought that this was so well written that it's the same exact thing that Ripple was trying to utilize for XRP. It's worth sharing with you guys, and it pinpoints a lot of problems that are going on, and hopefully this adds a little bit of clarity to people that have questions as to why all of this is occurring with digital assets, blockchain, and distributed ledger technology. So, okay. Blockchain technology will remove barriers to instant international settlement. Participants on a next-generation network can transact and have the transaction visible and settled between parties in minutes or even seconds instead of days. Barriers are springing up everywhere for remittance companies and banks. Overcoming obstacles to cross-border payments is especially daunting right now, with slow settlement times, high fees, and fresh competition bringing new challenges. COVID-19 has brought unwelcome complications to international settlement. The World Bank in April issued an alarming report. Its experts project global remittances to decline by roughly 20% in 2020, the sharpest drop in recent history because of the pandemic and resulting shutdowns. This means banks are losing business from a wide swath of society, employees ranging from seasonal workers to those who work for embassies, international organizations, and foreign companies. Adverse global conditions, etc. It's not too late for banking institutions to retain these customers. However, they must recognize the barriers preventing the execution of cross-border payments that are faster, more effective, and more reliable. Banks and payment companies face two key international remittance roadblocks. There is, number one, no global network. International payments are painful because no single global network or service exists for all banks' participation that enables real-time funds settlement. While SWIFT, which is the Society for Worldwide Interbank Financial Telecommunication, SWIFT processes basically every financial message in the world. My company uses SWIFT. If you work at a company, your company probably uses SWIFT messaging, and it's extremely inefficient. It's old. It's outdated. Like 1972 or something like that was when SWIFT revolutionized payments. SWIFT protocol is far-reaching. It's a messaging service and not a true banking network. It does not deal in settlement. A bank in it does, but it uses pre-funded accounts. A bank in one region can send a message to a bank in another with SWIFT, but they must have a bilateral arrangement or rely on other banks that have relationships. SWIFT unquestionably improved on the lack of international coordination preceding it. However, its structure remains inefficient and convoluted, causing long settlement cycles. This lack of a global settlement network carries higher transaction costs too. The global average cost of sending $200 was 6.8% in the first quarter of 2020, according to the World Bank. In sub-Saharan Africa, that cost is around 9%, high enough to be a deterrent to even sending it in the first place. Imagine that, people. For me to send $200 to you if you live in a different country right now, the average is 6.8%, okay? So for me to send $200, I'm essentially sending like 185 or whatever it is. 6.8 times 2 is what? It's 13.6, right? $13.60 I'm spending just by sending $200. And on a lot of these situations, what they don't mention in this article is the sender of these payments for, you know, if I want to send money to my family in a different country, they don't even know how much is going to be on the back end. Imagine if you're a migrant worker working in America trying to send money home to your family so they can eat, and you have no idea how much your family is going to receive because of the transaction cost. You have no idea when the payment's even going to get there to your family. You know, people are starving in different countries, and Swift's trying to figure out which employee they have that lost the payment message email. It's just absolute ridiculousness, and it's not where we're at in 2020. I can send you an email in 3 seconds, but you can't get a payment for a week, or it gets lost. It's ridiculous. Most banks' post-execution technology platforms are increasingly outdated. They also typically provide or prove difficult and expensive to change. These platforms often compromise multiple interoperating systems, including middle office, clearing and settlement, books and records, risk systems for securities processing, payment systems, general ledger processing. It's a ton of inefficiencies, people, across the board. That's what they're doing across the board right now. And most people don't realize that they are updating finance to make it like the internet, basically. And that is the key for distributed ledger technology and blockchain. They are updating finance and everybody's access to finance. So it's as easy as me sending you a text message, or it's as easy as me sending you an email. That's how fast you're going to get paid. Not even paid. That's how fast these banks are going to settle. And it's coming very quickly, everybody. As a result, banks must undergo high-risk, expensive, multi-year projects to elevate their processing platforms to modern standards. They're trying to polish a turd, people. And that's what, I mean, honest to God, if you've heard what Swift did, Swift walked into Ripple's offices like 5 years ago and had an interview with Ripple, and then magically came up with Swift GPI, which is not instant settlement, by the way. Swift GPI basically is just, I don't want to say promissory notes. I want to say basically it's like 2 agreements that these banks have to maintain this relationship so that they can process payments faster. But they still maintain the front end and the back end. Nostro and Vostro. We're going to get into Nostro and Vostro here in a second, which inherently it's a lot of trapped liquidity. Okay. All right, securities settlement. Although clearing and settlement from securities differ from remittances, a closer look at securities settlement provides a window to how banks can revitalize remittances. For securities, there is typically a central depository and a centralized clearing and settlement service, such as the DTCC, Depository Trust and Clearing Corporation, in the United States for the financial markets. DTCC is like $2 quadrillion a year or something. It's an insane number, what they process. Together, these two entities provide clearing, settlement, and custody services for member firms, meaning all transactions from financial institutions and their counterparties must be submitted. DTCC is the custodian of the stock certificates, and via continuous net settlement process, it provides each member with a net obligation between counterparties that it's due to deliver. While its netting provides efficiency, it is still a centralized process that takes 2 days in the United States. A major overhaul of DTC technology would be required to enable real-time settlement, and that is what they are doing, everybody. DTCC, if you haven't looked into it, Project Ion, and I'm going to forget the other one right now, Project Whitney, through DTCC are distributed ledger technology and have to do very much so with getting towards instant settlement and tokenization as well. DTCC is actively, and that's a lot of money, DTCC is actively addressing that security sector roadblock, evaluating distributed ledger technology solutions that it hopes will significantly accelerate settlement for their industry. Dual DTCC initiatives, here we go, Project Ion and Project Whitney, have been announced to better integrate DLT with capital markets. DLT is a key component of blockchain, direct value transfer, et cetera, sweeping away the roadblocks. Blockchain technology can mirror virtually any asset for instantaneous value transfer between parties with complete transparency. And this is going to be via tokenization, everybody. The evolution of the final account paradigm into the token paradigm via blockchain technology enables traditional assets like fiat, the dollar bills that you have in your wallet, currency, securities, and commodities to be digitized as tokens. DLT eliminates the need for middle office processing used to successfully confirm transactions and identities between parties. Real-time settlement reduces the need to spread reserves across multiple exchanges, optimizing capital utilization and reducing trading costs. Banking industry could be on the verge of moving settlement to the next level. Transaction participants are hungry for a new kind of transparent, global, 24/7 network boosted by seamless access and near instant transactions for a fraction of today's costs. And once the everyday populace gets a taste of what instant settlement tastes like, for lack of a better term, I mean, imagine being that migrant worker and having to send that money home. Not even that. You understand every time that you use your friggin' ACH, your debit card or your credit card, do you know that they charge you more in general whenever you have to use your debit card and you don't use cash? You know how ridiculous that is? Once everybody across the board gets a taste of what nearly free, and this is why I support XRP, is XRP settles for like 0.000006 or whatever it is, XRP, which is like a fraction of a fraction of a fraction of a fraction of a cent. Once the everyday, Jane and Joe get a taste of what that is, free instantaneous settlement and the actual power to maintain their own finances and do whatever they want with them, I mean, it's game over. Why do you think it's been delayed so long? Now, this is Ripple, 40 to 60% cost savings, 3 seconds to settle, 24/7, 365 payments. We all know that, right? All right, now this is also from the same dude that presented to the IMF, the first slide on here. This is was presented to the G20 as well. And same guy. The moderator was Gadatima, I'm pronouncing that name wrong for sure, World Bank Group. I've got IBM Global Markets, Dubai Future Foundation, Fidor, which is big, WeTrust, and Ripple. All right. Now, the end of this video, and I wanted to explain one or two things, but this was a very interesting thing that I found today. The terms Nostro and Vostro are used when one bank keeps money at another bank. Both banks need to keep records of how much money is being kept on behalf of the other. This is a correspondent banking relationship as it is right now in the legacy system. In order to distinguish between the two sets of records of the same balances and set of transactions, banks refer to the accounts as Nostro, which means it's my money being held in another bank, or Vostro, which means it's the other bank's money being held in my bank. And it's a crap ton of trapped liquidity that are sitting, and I've seen estimates of 5 trillion. I've seen estimates of like 16 trillion. I've seen estimates in the mid 20s as far as trillions of dollars that are trapped up in Nostro and Vostro accounts. By correspondent banking relationships, I mean, that basically means that these banks aren't instantaneously settling. They're holding all of their money in a different bank account, which is obviously not efficient, right? But it has to be there for them to be able to facilitate the legacy system, to facilitate clearing, Okay, now, what was interesting to me, this is the exact same slide that Ripple used in the first slide I had here. To remain, and this is in 2016, to remain competitive, back office costs for international payments will need to drop by 90 to 95%. We know that hasn't happened yet, but we know that's coming. This video does end with a little bit of a bang, though, everybody. I just want to give you a heads up. We see everything here. All right. Now, let me go into the next one. Cross-border payments revenue. Banks' revenues for cross-border payments could be significantly impacted in the next 5 years if they don't move, right? The opportunity is significant. Banks can aspire to a future with new revenues from additional services and where the operating cost of a cross-border payment drops to between $1 and $3, with full transparency and execution in less than 15 seconds. It would foster the creation of solutions that compete with new closed-loop propositions in the market. $1 to $3 with full transparency and execution in less than 15 seconds. That sounds quite a bit like what XRP can do. Obviously, we know XRP is way cheaper. There's still going to be some costs associated from the banking perspective. Less than 15 seconds sounds definitely like XRP. And they are talking about removing Nostro and Vostro in this whole presentation as well. This is the end of this video. I hope it's shorter. A new model for clearing and settlement. This is from the same presentation that Ripple pulled that bar chart from. While improving customer value propositions, operational redesign and cooperation will take the industry a long way. A more close-knit clearing and settlement system would serve as the capstone of a full system transformation. This could be achieved through the creation of a central clearing body, as happened for more domestic payments, but could also leverage distributed ledger technology. A number of industry players are already exploring the possibility of using DLT, such as blockchain, in the place of hub and spoke network. While this transformational step would open the door to true real-time cross-border payments, McKinsey's view is that it only makes sense to do so after the revamping of operational processes and client value propositions, making it a final step rather than a prerequisite for change. Only then will the full value of a systems overhaul become available. As an example of why this is the case, there is little benefit to adopting a real-time settlement engine if other aspects of the back-end fulfillment process continue to delay payment by multiple days. Technology-enabled possibilities should be thoroughly investigated today, but real change brought by new clearing and settlement solutions should be only expected in the longer term. This is 2016. What have we been seeing happen across the board for the past 4 years? We have been seeing all of these rails being built. We've been seeing all of these banking institutions. The past 2 years, there have been more mergers and acquisitions in finance than I think ever in history. This goes to show you what they're doing. All of this leads to instant settlement. All of it. All of it leads to tokenization, instant settlement, fractional asset capabilities as far as you holding a fraction of something, because that's going to open up liquidity and it's all going to be instant right across the board. But in order for that to happen, they need to change the other processes. Payments, messaging needs change first. Ripple has all of that covered, in my opinion. And XRP, in my opinion, is the greatest digital asset for settlement that's ever been, I'm not even going to say ever been created, because who knows, something else might be great too. But it's right in front of our eyes, everybody here. And I don't know how much clearer to make this. For all of these people that are expecting XRP to jump to $50 or $100 overnight, fantastic. I would love it if that happened. I'm more realistic. I like thinking, I can see that it's a process, but I do think that it's going to be a process. It's going to be a process. It's going to be a process. And then it's just going to happen. And then that's it. So, I mean, I just put my opinions, my 2 cents, and I hope you guys like this. I'm sure this video was way longer than I wanted. All right. You guys have a good one. Later.